Welcome back. Let's talk about market stocks. Amit Khurana of Dolat Capital Market is now with us on the show. Amit, morning. I remember one of our previous conversations on Paytm, and you were bullish about the opportunity for Paytm. But what's transpired in the last, fortnight on Paytm has just taken everyone by surprise. The crash in the stock is down, 50%. There is a crisis of confidence. RBI has intervened in a big way. How do you read the developments at Paytm, and what does it mean for the stock from here on?
Sure, thank you. Yes, so we've been pretty, sort of positive on the entire franchise. And let me put that in context. I think the RBI action came out as a real surprise to us as well, because I think the extent of observations did raise some serious issues, and the way the narrative was built up. RBI usually doesn't react that aggressively, but as a regulator, it did. Now, there are two aspects to this entire narrative. One, does it raise the risk premium that you want to give to the franchise, and therefore accordingly adjust your expectations of returns? And this is something that we are evaluating, considering the feedback from the management, and it's a public feedback that they have given, wherein they are looking to make some material announcements over the next few days on addition of third parties into the payment mechanism, while the Paytm Payments Bank is out of the equation. How far will that convince the markets and convince us? That's one of the things that we are waiting and watching out for. Second, once the regulatory oversight starts playing on the sentiment, the level of comfort for the investors tends to go down. I mean, we've seen that in so many other cases, whether it's pharma or whether it's real estate or whether it is any other business for that matter. And the fintech is a evolving business. It's very early days of the entire narratives here in India or globally. Will tend to raise some concerns around it, and I think evaluation of that as to how comfortable or discomfortable people will be with this entire situation evolving every now and then is something I think limits the upside potential on the stock for the near term. But having said that, we've taken a very basic look at the franchise. The other businesses continue to do reasonably well. I hope there is no impact on those. The numbers we will get to see only in April, May when the Q4 numbers come out. But at the interim, I think there will be some of these issues that we will be trying to get some clarity on, and then accordingly reevaluate. We did downgrade the target price, but after the sharp fall, it still falls into our buy zone, and that's where it is. Whether it forms a part of our preferred picks universe, that is up for review, and over the next few days, we'll take a final call on that.
Okay, that's Paytm. By the way, just come back and look at Hero Moto now. The pressure is telling. The stock is down almost 5.5% after what seemed like a fairly good quarter, inline quarter. Nothing wrong with the basic P&L. But I just want to go back to the note that Reema had highlighted earlier as well. This is UBS. Now, UBS picked out a peculiarity in the Hero Moto numbers, talking about the losses on the EV side of the business. And according to them, this 200 basis points EV loss that Hero spoke about, that translates into an EBITDA loss of about 200 crores. And if that's correct, then it translates into a negative margin because, they're not even budgeting 200 crores of top line on the EV business right now. So losses far, in excess of the revenue that the company is garnering in. So that seems to be something that the market has taken note of as well. Amit, hi, great to have you on the show as always. I don't know if this caught your eye, whether you would attribute this slide in parts to this. Otherwise, I mean, Hero's been having a great run, right? Like, it's pure Bajaj as well.
Yeah, that's true. I think EV business for Hero has been a bit of a laggard, and that was one of the reasons why, amongst the peers, Hero was the underperformer stock. If you see the last 2.5 years, it's only recently that their core portfolio, which was up for an upgrade, was the bigger part of the re-rating that we were also pushing out for from second half of FY24. The bookings on the premium part of the portfolio, the deliveries have just started. And I think the bookings still continue to be pretty strong there. To the point on EVs, I think it's very early days. There will be losses. I think that's part of the assumption that we have built in. Of course, one can argue about whether it is a X or a Y or a Z number. But I think largely the re-rating that we were calling for was the core portfolio, the traditional portfolio, and that premiumizing itself. And then, of course, you would expect some better traction from the rural, which is a greater play for Hero, and that has started showing some evidence. So therefore, Hero still continues to be one of the top picks that we have for the two-wheeler auto space. versus others which got re-rated much stronger. For example, TVS is what we were earlier bullish on, but the valuations have left very little room. And by the way, TVS portfolio on the EV front has been far superior. So that was the earlier cycle that we played. But in recent times, we played Hero and we continue to do that.
Amit, any other stocks where you have great conviction, where the narrative is building up for going long now? Do you want to share some ideas with us?
Sure. So we've been more bullish on the discretionary part of the portfolio. Real estate is something that we like. We continue to like that. And I think the FY25 and 26 timeframes will throw a lot of cash for real estate businesses. And how will that get utilized to build further development portfolios, I mean, real estate portfolios, construction portfolios, or whether you get to see higher dividend payouts is something that we will watch very closely. We've got, in our conversations, management's talking about both scenarios on the table. And so that's one. Second, specific to stocks, we like Poly Medicure. It still continues to be one of our top picks for the healthcare space. And it's a very clear structural play on the healthcare segment as government keeps spending more and more money on building healthcare facilities and private healthcare picks up. They are a direct beneficiary of the consumables. And having done the capex pretty aggressively, we believe that the next 2 to 3 years they're well set for a good compounding story at 18 to 20% range with balance sheets which is strong and throwing out cash flows.
Poly Medicure, okay, so that's one of your high conviction ideas. Finally, Amit, before we let you go, can't let you leave without asking you the PSU question. Whether the kind of really bad earnings that we've seen, anemic earnings, a lack of top line growth, EBITDA collapsing from the likes of SJV and IRFC, all of these PSU earnings have been bad in the last 48 hours. Now, is this just healthy profit taking and a good entry opportunity, or is this signaling that the best of this PSU party is over?
Well, I can't comment on those stocks because we don't cover them. But in general, we saw the PSU rally a lot of it was led, of course, partly by performance. Some of the PSUs have delivered stellar earnings. And I think the ripple effect of that really spilled over to some of the other names, which probably did not deserve those kind of valuations. So, as we say, the rising tide lifts all boats. So was the case with a lot of these PSUs in sectors which probably we had not even seen for the last so many years. So some bit of money got allocated, and you will see those profit takings happening now. And I would suspect that one will have to be more guarded in terms of how to allocate what exposure to which sector and subsector. So while we were pushing PSUs, bank stocks at certain stage, but even there I find now the valuations are pretty reasonably well enriched. OMCs for that matter, pretty well stretched. And some of these other small cap and mid cap names have got a lot of optimism on the continuation of the government and continuation of policies. But I think there's a lot which has been captured in these valuations.
Thank you, Amit, for joining in.